If you want financial freedom, time freedom, and want to leave a legacy for generations to come, you probably have heard real estate investing is the place to do that. How do you get started? What do you have to do? When's the right time? If you are looking for those answers, you've come to the right place. My name is Kyle Stanley, and this is Fearless Flipping. My mission is to help you learn this business and conquer real estate investing. I'm not going to take much time for you to hear my voice. I want you to hear Tim Bratz's voice right away as he teaches you how to build a multifamily portfolio, exactly how he did it with $260 million in 4 years, just under 4 years that he was able to build up that portfolio. Before we get to it, make sure to like, comment, review, subscribe, hit that notification bell. Whatever you do, it helps us with our mission of getting out to more people and helping people to invest better in themselves and financially by conquering real estate investing. Now, let's get to it with Tim Bratz on how to build a multifamily portfolio. Hey, we are back at it with Tim Bratz from Cleveland, Ohio, and this guy has got properties all over the east side of the U.S. here. We're going to talk about how he's built that up. And if you haven't checked out the first episode, not only do we talk about real estate, but what I just loved about the conversation, Tim, we talked about mindset, we talked about getting past fears. And I just think in itself, you had so much along your journey to bring you to where you're at today. People need to hear that. So if you are listening to this one, you haven't listened to the first episode, press the pause button, go back, take a listen, and you'll be glad you did because it will get you caught up to where we are going right now in this episode, which is how to build a multifamily portfolio, just like what Mr. Tim Bratz has done here. Tim, before we get into the how-tos, I do want to ask you where you see this apartment complex, like this crazy appreciation that we've seen over the last few years, and where it's going. Can you see that continuing to happen?
Yeah. So hot topic right now, right? Are we at the peak, or is this a bubble? Is it going to burst? What does all that stuff look like? I listen, man, I don't think anybody's got a crystal ball, right? So for me, I look back at when I got involved in real estate was, 2005, I started a construction company. 2006, I interned with one of the largest home builders in the country. 2007, I became a broker and started doing commercial leasing and everything. And I didn't start buying investment property until 2009. Thankfully, I'm not a few years older because I probably would have done something stupid and gotten some of these no-doc loans and bought things at retail price. You know what I mean? But fortunately, I got involved in real estate when I did, which is at the bottom of the market. It has never been a good market for me. I don't know what it's like to be in a good market until now, right? From an investment standpoint. But what I did, my entire business model is modeled after what happened in the last downturn. So I'm a very analytical, not necessarily like data oriented, but I reflect a lot, right? And I think about things a lot, and I think about why things work, why things don't work, how I could make them work better. And I remember sitting back and seeing people before the bubble burst worth multiple 8 figures, 9 figures on paper, right? And they're worth so much money and they got all this stuff going on and all these things. And then all of a sudden, within 18 months, they're worth nothing and they're going bankrupt. And I'm like, how the hell is that possible? Like, if you had that much, like, how is that possible? And I learned a lot about money. I learned a lot about real estate, a lot about property at that time. And my entire business model is modeled off of making sure that doesn't happen to me. So what I learned was that if you invest for speculation, meaning you buy at this price point and you think tomorrow the value is going to be more, you are buying for speculation and you're hoping for appreciation. Okay. The people who bought and flipped and built for resale values, hoping values would be more 6 months, 12 months down the road than they are today, those are the people who all got wiped out. And their net worth on paper was fugazi, right? Fugazi, whatever it is, a fairy tale, pixie dust, right? It's not real. And so the ones who were able to ride out the storm, I'm like, and then I look at some other people and they're like, yeah, I'm still buying properties. I'm buying a bunch more property. I'm buying it for 20 cents on the dollar now instead of what I was buying it for before. And I'm like, how did these guys ride out the storm? And you know what the difference was? The people who lost money bought for speculation. The people who were able to ride out the storm bought for cash flow. And they always, so there's multiple things that I'm doing currently, and that I would suggest other people do to make sure that they don't get wiped out when this market does shift. Because we're obviously at the peak. Markets are cyclical. Everything ebbs and flows and goes up and goes down. And if you're blind to that, then you should not be investing in the first place. But there's a couple things. One, always buy wholesale. Never pay retail for anything. If you're always buying, and my model is off of the single family model. So I was going and buying and flipping houses all in for 65% of the stabilized value. So house I'm selling for 100 grand, I got to be all in purchase price, renovation, holding costs for $65,000. When I got into commercial real estate and buying apartments, I saw people paying, you had a couple zeros, so maybe it's $10 million, right? And they're paying $10 million for a $10 million building with hopes that it's going to appreciate by 5% every year for the next 5 years. Like, think about where we're at. Like 5 years, like imagine buying in 2006 and trying to resell or refinance in 2011. No chance, right? Nope. Values were cut by 40% or 30% or wherever you were. And so there's a couple things here. One is always buy at a wholesale price and be all in at a low enough cost basis where now you have options, right? You can sell it, you can refinance it, you can hold it and let it cash flow. You have a couple different options in order to make that work for you. I think when you have multiple options, you're in a much better position in all aspects of life, right? So that's one thing, buying at a wholesale price. Two, buying for cash flow. I don't like flipping. Me personally, I was never good at flipping houses because I don't have the risk tolerance for a property to sit there and not produce cash and just know that I'm paying out of pocket every month that it doesn't sell. So for me, I started flipping turnkey rentals and I started flipping apartment buildings because if it sold, phenomenal, I'd make great returns. If it didn't sell, I don't care because I still got cash flow that covers all my operating expenses and my debt service and puts a couple bucks in my pocket every month. So now I have options. I can sit back and I can wait for the right offer to come through. The other thing is that I do is I force appreciation. I know we're probably going to dive into how I structure my deals and everything, but I force appreciation by doing value add. I don't buy right now. I don't buy anything that's stabilized right now. I buy things that are a little bit distressed, physically distressed, managerially distressed, and we force appreciation. So I'm all into an apartment building for $6.5 million that's now worth $10 million, but I created the appreciation. I didn't hope for it, right? So now, because I create such of a spread by putting so much work into my buildings, within 12 or 18 months, I can refinance and put long-term debt in place. So long-term debt in commercial real estate, it can be amortized over 30 years, but usually the term is 10, 12 years. I'm okay with that because if you bought in 2006, even if you waited till go through the Great Recession, the largest trough in real estate in 80 years, by 2016, 10 years later, the market came back and you were able to do two things. One, pay down enough principal on your loan amount where now you're at even a lower basis. And two, over 10 years, a cycle will occur over the course of 10 years. So even if you bought at the peak and you go through the trough, 10, 12 years later, you're usually back up on the uprise again, right? So for me, I always put long-term fixed interest rate debt in place, and I put a long amortization schedule on there. I could do a 20 or 25-year amortization schedule, but for me, I do a 30-year am because I don't want to be forced to make bigger payments if the market does shift, if occupancy does slightly drop, if values change or anything like that. If I have a less of a payment I need to make every single month, then it gives me options on what I can do with the spread, right? So going like in 5 years, I don't know what could happen in 5 years. I don't want to put 5-year debt on any of my properties. Why? Because we could have potentially 3 different presidents over the next 5 years, right? The one we currently have, the one, and then a new one, right, potentially. So there's a lot of political uncertainty that comes with it. There's a lot of economic uncertainty that comes with it. 5 years is not enough time to go through a cycle and then get back on the upswing. So for me, I don't know where we are in the market, but there's only these things that I can do to make sure that I'm I'm covering my bases to make sure I don't get kicked in the crotch when a market shift does occur. I know it's going to occur, but I'm not going to let that paralyze me with fear. Right now, financing is great. I just refinanced a 134 unit apartment building 2 weeks ago, and I got 4.44% interest rate on it. Dude,
Wow.
That's when I make a payment,
super low.
I'm taking money from my right pocket and putting it in my left pocket. Like I'm okay paying a little bit more because I'm not paying as much that goes to interest expenses. Now interest rates go up. Guess what? Values are going to come down because the purchasing power and the monthly payment power isn't going to be as strong. So as long as you're buying at a wholesale price, as long as you're looking at a long-term opportunities and long-term plays, you're buying for cash flow, and the cash flow can make sense regardless of what happens with the economy, then I think you're gonna be able to ride out pretty much any storm.
That's awesome. Okay, so let's just.
And here's the other thing. Not only will you be able to ride out the storm, you're gonna be one of the only bankable, financeable people that can get bank financing when the market does shift, and you're gonna be able to go buy everything for a fraction of the price. Boom. So that's where you really get ahead.
Hey, Fearless Flipping community, let's hear from one of our sponsors right now. Have you thought about becoming a real estate investor, but you have no money, or maybe you just don't feel like you have the right guidance, the right system, or maybe the right plan? Well, the Phenom Investor Blueprint course is your answer. Developed by seven-figure earner Matt Garabedian and a good friend of mine. Matt uses his 10-plus years of real estate investing knowledge to teach you how to get involved with real estate investing without spending a dime. Matt's wholesaling techniques will work for any market at any time. So if you want to make 6 figures, 7 figures, or more, yeah, that's right, it's possible. It's time to invest in yourself. Check out the Phenom Investor Blueprint at fearlessflipping.com/phenom. Again, that's fearlessflipping.com/phenom. This is your first step to financial freedom. fearlessflipping.com/phenom. Love it. Okay, so let me just, once again, amazing information. So let's just summarize it for everyone. The big thing here that people make the mistake of is investing based on speculation. It's going to rise. You do that, you're going to get hit in the teeth. You invest for cash flow. So that was the big thing for you, is you invest for the cash flow. You always buy at that wholesale price, and you force the appreciation. That's what I love. You've just created equity, and there's that little gap. So, let's just say, like you said, you buy a place for $650,000, it's now worth $1 million because you force that appreciation, you're all in. Well, you've got that $350,000 that if the market depreciates, the likelihood of it going down $350,000 is probably not going to happen. So you're still in the positive. So that gap, that little bubble there that you've created, it's genius. And it's something that, because you're doing that, you're not going to get kicked in the teeth. Now, the big thing I want to make sure I understand is that, and I already know the answer to this, but I need my viewers to understand this. Whose money is it that's going into these deals?
Yeah. So when you get into commercial real estate, it's 90% based on the deal, the lending, the financing. 90% of it's based on the deal. 10% is based on the borrower. Now, the borrower needs 3 things. The borrower needs a net worth equal to the loan amount, liquidity equal to 10% of the loan amount, and experience in owning or managing that many units. So when you go buy a building that's a $10 million loan, you have to have a $10 million net worth. You have to have at least $1 million liquid, and you have to have experience. That's probably about 200, 250 units or something, managing and owning 200 units. So for me, I always thought I had to stockpile my own cash in order to get involved in these deals. I don't care how much money you have. You will run out of deals or run out of money if you're doing the deals this size, right? This caliber. And also important is you got to stay liquid, in order to qualify for these loans. So I keep all my money liquid in over $250 million worth of property in my portfolio. I've only used $75,000 of my own money ever.
It's amazing.
I always raise private money. It's assumed that you're going to bring private equity or private money to the deal. That's going to be what you use for the down payment and for your operating capital. The lenders are cool with it. In residential, they're not cool with it, right? But in commercial, it's assumed that that's what you're going to do. That's what everybody does. So you don't have to have your own money, right? You don't even have to have your own credit. Like you don't have to sponsor your own deals. There's people that I go in, I sponsor their loans for them. And, they don't have the net worth. They don't have the liquidity. They don't have the experience. I come in, I sponsor it. They give me a little chunk of the equity, and I'm able to kind of like mentor and coach them along the way as well. So you don't need your own credit. You don't need your own money in order to get involved in this. And in fact, it's actually more common that you don't use your own money and don't use your own credit than people who are using their own money and their own credit. So now, hey, God willing, if you got your own money, go ahead and use it if you feel like it. And there's definitely something to be said about not owing anybody anything and having a free and clear portfolio. For me and where I'm at, I think I reduced my risk pretty significantly to the point where I'm confident in my ability to use money. And although I'm 100% leveraged, I'm really only at 65%. My portfolio is at 57% leverage of debt to value, right? So I'm 40% below. The market would have to shift by 40% in order for me to even break even, right? Yep. Plus I have cash flow. Plus every month we make a mortgage payment, we're paying down principal. So that equity ends up continuing to increase every 30 days. And it appreciates every time, we bump rents on an annual basis and that kind of stuff. So, for me, getting involved, I have the portfolio, I have the balance sheet, I have the net worth and liquidity now to qualify for these loans, but I didn't have it early on, and I just found really good deals, or I found somebody who would help sponsor the deal for me, and I was able to get financing that way.
Boom. Okay. So that right there was going to be my next question. So I want to dive into that for a second. So, you're in the beginning, let's just say like I'm sitting here, I've got maybe $20,000 to my name. I'm not finding a $20,000 deal. There's probably not out there. $2,000 of liquidity is not going to do me any good. And, I don't have any experience. So how in the world do I get that deal? What I'm understanding you're saying is partner with someone. Is that the best way? Someone that's already been there and done that?
Yeah. There's people in your own town who will help. They're called loan sponsors, right? And they'll help bring money, or they'll bring their financing and their balance sheet to the deal. The most important thing that you can do, especially in today's market, is go out and find good deals. If you can find a deal, you will find the money. You can call me up. I will sponsor your deal. I'll bring money for your deal. I have more access to more capital than I can deploy right now, and I'm looking for more deals, right? So if you can find somebody local in your own market, you can find anybody who in any of these Facebook chat rooms, or, hey, who sponsors deals? Who can partner up with me on this? Who could bring the balance sheet and help me structure this whole thing? And if you're a good operator and you find a good deal, I'll partner up with you. Even if you're not a good operator and you just say, hey, let me just go find a deal and send it to you. I pay acquisition fees, and you can get acquisition fees. You can wholesale that kind of stuff. Or you can even take your like wholesale fee or your acquisition fee as equity in the deal, and then really build some long-term equity that way. So, it's a cool way of getting involved in projects where you don't have to be Superman, right? You don't have to be Wonder Woman. When I was doing single family, I had to do everything because there wasn't enough juice in the squeeze for that. Mm-hmm. I couldn't bring on partners to carve up $15,000 wholesale fees, right, amongst 4 people. Like, nobody gets excited about that. But when you're talking about a $10 million building that you're all into for $6.5 million, and there's $3.5-4 million of equity there, that's enough juice in the squeeze to get a few A players excited about partnering up on that deal. So you can focus on what you're really good at, what your unique ability is, and bring in a joint venture partner to focus on their unique ability. I'm really good at the marketing side. I'm really good at I have the balance sheet, right? I have the experience. I can mentor. I can do all those things. What I don't have is bandwidth and the time to go out and actually meet with contractors and kick the table every couple of days and make sure things are moving along. And so, like, that's a massive value that somebody could bring to me, and I'd be happy to partner up with them on something like that. So there's people in your own local market that you can joint venture with that are in the same position that I'm in, that have the bank balance sheet and the cash. They could bring it to your deal if you have the capacity to take on that project.
All right, Tim, I'm competitive. You've challenged me. You said go out and find a deal, and I'll partner up with you. So if there's other viewers out there that are wondering, well, how in the world can I bring a deal to a guy like Tim? What would be the first step? How do you go find these deals?
Yeah. So the same way that I found deals on the residential side, I find deals on the commercial side. So driving for dollars, just like there's houses with tall grass and boarded up windows, there's buildings with tall grass and boarded up windows. Dialing for dollars. Instead of calling for sale by owners, we call for rent by owners. Hey, not interested in renting, interested in buying the whole place. You interested in selling?
Yeah.
Yes, no, maybe, who knows? Who cares? Here's a good one. Jump on Google and just Google apartment buildings in whatever your local town is and look for the bad and the worst reviews. Typically, those are pretty disgruntled tenants. It's got crappy management in place. The landlord's not taking care of the property. And you can call up the management company or the owner and say, hey, I see you're having some struggles with your tenant base and blah, blah, blah. And, do you have any interest in selling? I'd be interested in taking this thing off your plate. Go to the local building departments. Like the city that I'm in right now has a building department, and they rank every building 1 to 4 or 0 to 4. 0 meaning there's no issues with the property at all, physical distress to the property. 4 meaning like the city's about to take it over because it's in such a dump condition, and they will gladly give you the contact information of the owner of some of those commercial buildings because they're slumlords. The city doesn't want to deal with them. They want them out. They want somebody to come in who's actually going to take care of the building, take care of the property, respect the neighbors and all that kind of stuff. So those are all different ways. Another thing that I found is a lot of residential investors, wholesalers, brokers come across commercial deals and they don't know what to do with them. Sure. They don't know how to underwrite them. So they just throw them away. So what I've done is I've just built a reputation by telling everybody in town on social media, on my email drips, on everything that I do, that I buy apartments. Everybody knows that I buy apartments in Cleveland, Ohio, right? And I'm not the biggest landlord in Cleveland, Ohio. There's guys who own 10,000, 12,000, 15,000 units, but I'm probably the best known in Cleveland, Ohio, because I'm out there so much telling everybody that I'm buying apartment buildings. So, just reach out to your existing database of residential wholesalers, investors, lenders, vendors, brokers, whoever, private money lenders, doesn't matter, and tell them all that you're buying apartment buildings and send me deals, send me deals, send me deals. They'll send you 99% of it's going to be crap, right? And so you got to get really good at sorting through crap. And but there's going to be a needle in the haystack every once in a while that you're going to be able to take down. Hey, like it doesn't take a lot of buildings to build a significant net worth. Oh, right. Sure. Yeah. There's, I was just looking it up on HUD's website, some statistics for how many apartment buildings there are in the United States. There are over 680,000 apartment buildings, 5 units or bigger. Multifamily alone, not even talking about any other commercial assets, just multifamily. 680,000. Like I have one building that's 48 units that would fall into that. 48 units. It's, average size, not massive, but it's a 48 unit building. I'm all in it for $2 million. It's worth $3.5 million 12 months later.
Nice.
Between me and my joint venture partner, we increase our net worth by $1.5 million in 12 months. We're going to refinance it, take about $800,000 off the table, tax-free. We will leave $700,000 of equity in the deal. And then we'll have about $75,000 of cash flow annually after all expenses, after all debt service is paid. $75,000. We just gave ourselves a $75,000 raise, and we took, my portion's $400,000 of the tax-free money off the table, and my balance sheet still increased by another $350,000 because of the equity that's still in the deal. How many of those deals do you need in order to retire?
Yep.
1, 5. 1 a year for the next 5 years? Like, you don't need that many of these things. There's plenty of juice to go around for everybody to partner up and create legacy wealth. Just the type of wealth that just transforms your family tree, just by getting 1, 2, 3 apartment buildings that aren't even the big apartment. It doesn't have to be a 200 unit. It doesn't have to be a 500 unit. It doesn't have to be even a 100 unit. You get a couple 40, 50, 60 unit buildings, you're set up. You're set for life.
It's awesome. And, the one thing that I always preach is that in real estate, there's a million different ways to make money, right? So this is the passion that you found. This is the one thing, the
Right.
multifamily value add that you found. And there might be someone here listening right now that says, yes, that is for me. This is something they got to commit to. Like, they need to commit to this full on with all the other stuff.
I think anything that you do, you got to
Exactly.
commit to it full on. Every
Exactly.
time I get into a different app, like I still lose money and I lose time on deals. I tried flipping 700 or 270 acres, a mountain. What the hell was I thinking? I don't mountain. What the hell? And I thought I'd make $1 million in 6 months. And 2 years later, we just liquidated the last lot.
Mhm.
And I walked away with $15,000. That's it. Right?
Wow.
So I'm like, what am I doing? Why am I wasting my time in different? So it doesn't matter what you do. You have to dedicate and be the best in your local area at whatever that is.
Yep.
And for me, it's apartment buildings. Apartments aren't the right thing for everybody. It meets my long-term goals. It meets my ambitions. It meets my skill set probably better than anything else. So that's why I just stick to apartment buildings. But I know people who crush it in single family rentals. I know people who crush it in retail and in mobile home parks and in self-storage facilities. But it's a niche, right?
Exactly.
If you go niche, you get rich, right? Versus trying to appeal to everything. Everybody who tells me they're a serial entrepreneur, I run from them because it tells me they're not focused.
Yeah.
Because I know every serial entrepreneur. When I was a serial entrepreneur and I put that in my Facebook profile, I was broke as shit. Like, dude, I couldn't pay my minimum bill on my credit card, right? The minimum payment on my credit card, I couldn't make it because I was a serial entrepreneur. I was trying to get involved in all these things at one time. And the reality is, dude, if you're a general surgeon, maybe you can get by and create a living,
Mhm.
but like the neurosurgeons and the brain surgeons and the heart surgeons and the people who are specialized, they're the ones who really get compensated for the value that they bring to the marketplace.
Absolutely. Yeah. It's just eliminating shiny object syndrome. It's committing to what you want your niche to be. And yeah, I mean, all you just said, no matter what you're doing, especially in real estate, my encouragement to everyone is, if this is what you're going to do, you go for it. If you're doing wholesaling, you're killing it at wholesaling, keep killing it at wholesaling and keep educating yourself about what Tim is talking about. And maybe at that point, when you're like, yeah, it's time to go all in on this, that's when you go do it. And so when they are ready to do that, Tim, do you have an awesome opportunity for them to learn more? This was a 5,000 foot overview, like diving deep into this for 3 days. What an awesome opportunity. Can you tell our viewers and listeners about that?
Yes. I mean, I think I had mentioned it on my last one. I'm not a guru, right? I wanted to build my business in a way that kind of joint ventured and partnered with other people. So that way I can continue to grow my portfolio. At the same time, I don't take on a bunch of overhead. A lot of people, every time I post on social media or something, you guys can follow me, Tim Bratz. I'm on Facebook. So hit me up on there is where I'm most active. Every time I post, people are like, hey man, do you coach? Do you mentor? Can I pay you to do this? Can I come and sit down with you? Can I, whatever. And so there's a deep need, for some sort of education platform that's not traditional syndication. Traditional syndication is nonsense. They're teaching you to go build broker relationships and buy retail price properties. And like, dude, I don't like traditional syndication. So not saying my method's better or worse. I don't know. I think it's more risk averse, lower risk, more insulated for where we are in the marketplace. It takes a little bit more work, right? You got to be good at finding off market deals. You got to be good at managing contractors and renovations. If you're not good at those two things, then might not be the best for you. But I think for where we are in the marketplace, buying at a wholesale price, forcing appreciation by putting in that sweat equity is a big deal. And the way that I structure it, make sure that the private money investors get paid very well. Make sure that you keep a lot of the equity if you're creating a lot of that value as the operator, and it gets you involved in deals. If you want to do deals, come out to my event, commercialempire.com, and we dive deep into everything where you can go do deals on your own, or if there's a deal that's a little bit bigger than what you feel comfortable with, and you want to bring me in or one of my partners or somebody else that you meet there, awesome. And let's just get some deal flow going. And I mean, we mentioned that there's over almost 700,000. That was a 2017 statistics. So there's probably more new construction, and it's probably close to 700,000 apartment buildings over 5 units or bigger in the country right now. And again, you only need a handful of those in order to change your financial future forever. So, the wealth, especially through apartment buildings, it's like sunshine. Like Kyle, you getting sunshine doesn't take any sunshine away from me, right? We're able to both get plenty of sunshine.
Abundance.
Yeah, and there's no competition here. There's so many deals out there, it's unbelievable. So you just got to turn them over, right? You got to turn over enough rocks, and you got to be able to find them and get to the motivated sellers before the brokers do. And but there's plenty of opportunity out there, and there'll continue to be plenty of opportunity as we move forward in the market. So if you guys want to plug in, check out commercialempire.com. And if you've got any questions, hit me up on social media. I answer, the messages that people shoot over to me, and I don't have some bot answering or some assistant answering. So it really is me. And connect with me and join the Facebook group too, if you guys want to learn a little bit more and just kind of pay attention to some of that stuff. So
awesome.
Kyle, I appreciate you, buddy. I appreciate all the value that you bring and what you share with your listeners. And dude, I hope it comes back in a whirlwind for you, because I know it will. So I appreciate you, buddy.
Hey, you trust the process, and the process will pay off for you. And I just want to encourage everyone, if you do reach out to Tim, the biggest thing is try to provide yourself of value too, because this guy right here that is talking is not a little fish in a small pond. He is a big fish in a big pond, and he's got a lot going on. And the number one thing that I know is that if you're going to expect to get value from Tim, you got to be willing to give some value too. So you've been awesome today, Tim. If our viewers and listeners are not inspired to go out and just completely change their financial future, I don't know what will get them excited, because I'm stoked right now. I've got a ton of notes, and people can find these show notes at fearlessflipping.com/Tim Bratz. That's BRATZ, and go to commercialempire.com. That will also be in the show notes. That is going to be awesome. I need to check that out for myself, Tim. Would love to get out there and meet you in person over in Cleveland for sure. So, Tim, any last words before we sign off here?
Think big. Hey, it's not difficult. It's actually easier to do bigger deals than it is to do smaller deals. So don't limit yourself. Don't pay attention to the negative talk in the back of your head. Go out, do a big deal. You're going to get addicted to it, because they're actually easier to do. More people are getting paid. The broker's getting paid, right? The lender's getting paid. The bank's getting paid. The private money's getting paid. The insurance person's getting paid. Everybody's getting paid. And so everybody wants these deals to happen, and everybody is in the same boat, rowing in the same direction, helping you do some of these bigger deals. And it's exciting to do, and it's exciting to see your net worth grow. And at the same time, pay attention to what we talked about early on to make sure that, as quickly as you can grow your net worth in commercial real estate, it can be wiped out if you buy the wrong deal. So make sure you're buying for cash flow. Make sure you're buying at wholesale prices. Make sure you're forcing appreciation, not speculating on it. Make sure you're putting non-recourse, fixed interest rate, long-term debt in place, and a lot of those things that we talked about earlier, in order to, as you increase your net worth, you increase that safety net that goes with it as well. So if you guys got anything, hit me up. I'm always around. Appreciate you. And hopefully you guys got something out of this. So thank you, Kyle.
Perfect. Eliminate the voices in the back of the head. Think big, and soon you can conquer real estate investing. Thank you, Tim. Gold, absolute gold, guys and gals. That is exactly what you just heard from Tim Bratz. And I love what Tim had to say about just dreaming big. It takes the exact same effort to dream big versus dream small. And why not dream big? Why not go for bigger things? Tim was exactly where I am right now, which was single family, flipping, wholesaling. And it's things like this that really get me excited and make me want to do bigger things, dream bigger for me, for my future family, for others around me. And I hope that's exactly what it did for you today. Make sure to go to the show notes, fearlessflipping.com/Tim Bratz. Check out his 3-day seminar, where he's going to be bringing even more value to you and just being able to help you build that multifamily portfolio. Who wouldn't want to do that after hearing the exact kind of success that Tim has had? And I really believe that you can do that if you just follow the steps. Anything in real estate, just follow the steps, take the emotion out of it, look at the deal, look at the numbers, and you can conquer real estate investing. We will check you out next time.